So you want to learn about 3M? Well, you came to the right place. Throughout this video we're going to be taking a look at all aspects to do with 3M.
I fight to live, I fight to strive. One day I'll have what I want in life.
So from a dividend investor perspective, the first thing obviously you'd want to see is if the company even pays a dividend. So we'll start the video off by that, and then we'll go on to look at the company and what it does. Then we'll look at the financials of the company, the income statements and the balance sheets, and then we'll come to a conclusion whether this company is worth being in your portfolio and my opinions about the company. Without further ado, let's head straight into it. So I use a few tools when analysing companies. I'll use this Simply Wall Street. I'll use the company's actual website, which in this case is 3M, and then I'll also use Seeking Alpha. So I'm on the dividend section here. As you can see, it has a 3.14% dividend, which is very good and passes the test already. So the company's at 3.1, the bottom of the market is 1.3, and the top of the market is at 3.6. So you can see it's getting up there. So it's very nice to have as one of the companies. These are some of the quick checks that it has. We'll go through them down here anyway. So you can see a noble dividend again, which is higher than the bottom 25% of the US market, and then it's a bit lower than that, but not by much, so we don't really care. Stability and growth, this is another important one for a dividend investor. I have another bit to show you about this in a minute. So you can see the dividend per share has consistently gone up throughout the years. The dividend yield will just fluctuate based on the market value basically, and the earnings per share is up there. So as you can see here, the dividends have been stable in the past 10 years and the dividend payments have increased in the last 10 years. Now this part is what surprised me, was the payout it has. Compared to other companies, if you've watched my previous videos, I'll link the playlist on screen now. You can all see they have pretty high payout ratios, but this one has a 63% payout ratio, which is very good and is well covered by the earnings. So it's great to see that. And then the future payout is even predicted to be lower. So if it keeps increasing and the payout goes down, this company will be in a very good position. So we'll take a look at the dividend payment history now. You can get this from the 3M's website itself. So you can see the declared ex-dividend date, the recorded and the payable. I'll go through each of these in a minute, what they mean, but that'll be on a different slide. So I want to show you just basically this. So you can see the years. We can go all the way down to, just scroll. 1977 is when they paid out their first dividend here. So you can see it's increased and kept increasing steadily to a point now where it's got up to a good value. Now this is a very good thing for a company to have, and it's wanted for a dividend investor. And we can see it's gone up there and even up to this day. So by this account, we can probably safely assume in 2021 that we will see a dividend increase. However, we did just have the pandemic, so maybe not. But again, when we look into the company and what it does, they do sell like products to do with masks and that, so that'll be good. Okay, so going back to what we mentioned about the ex-dividend date and date of record and date of payment. So I'm going to put this on screen so you can read what I'm seeing, and I'll also just tell you what they mean. Okay, so the ex-dividend date is if you buy a dividend paying stock one day before the ex-dividend date, you will still get the dividend. But if you buy the stock past the ex-dividend date, you won't get the dividend. The date of record is when a company looks at its records to see who the shareholders are and what investors need to be paid out. The date of payment is when the shareholder will receive their dividends, and this date is generally a week or more after the date of record. Now we'll go over to 3M's website and we'll have a look at what the company does, as we cannot invest in a company we do not know, and we need to know how it makes its money, which avenues bring in the most revenue, etc, etc. So let's jump straight over to there now. So before we head over to the company website, I've just brought you over to my Word document where I have all my investing company background stuff. So I've got a list here of what the company does. So it operates through 4 segments: safety and industrial, transportation and electronics, healthcare and consumer. The safety and industrial segment offers personal safety products, industrial adhesives and tapes, abrasives, closure and masking systems, electrical market and automotive aftermarket. The bits I highlighted in green are the most important parts, so I'll put this on screen so you'll be able to see, and just pause the video if you want to read it. The healthcare segment offers medical and surgical supplies, skin health and infection prevention products, oral care, separation and purification sciences, health information systems, drug delivery systems and food safety products to healthcare industry. The consumer segment provides home improvements, home care and consumer health care products, as well as stationery and office supplies to various consumers. This segment is also involved in the retail auto care business, and it says down here the company was founded in 1902. So I can see this company has a lot. It is diverse through many segments, and being founded for that long and still being around to this day just promotes trust in the business as a whole. We'll now look at the 3M's website, where we can look at all the products it has and the brands. I just want you to get an idea of how big this company is and how much it would take for this company to be overtaken. It definitely has a competitive advantage with all the industries it's in. Okay, so now we're on the 3M website. We can see that this is a 3M products. Down the side we can see the industries it's in, so automotive, commercial solutions, communications, consumer, design and construction, electronics, energy, healthcare, manufacturing, safety, transportation. So like we've listed before, there's so many, and on the right we can see some of the products it has, and they all keep going. It says 20,019 results at the top right, just them. There's a quick clip, there you go, up top there, and then it keeps going and going and going. Everyone has used the 3M products at some point without even knowing it. It is that well known. It will always be used in offices, construction work, anything. This company. And now here are the brands, and then it's split into segments as well. You can find investor information on their website as well. Most websites have an investor section. If you need to stop the video at any point to look at any of these, just feel free. I'm just showing you an idea of how massive this company is. Alright, so now we'll then head over back to this 3M bit over here, and we'll go through some of the financial checks. Some of it we've been over and some of it's not too important. So the 7-day return isn't really important, but we can see that it's beat the industrial in the market. And the year is what matters though. So we've got 41.8% for 3M and 47.4% for the US industrial. So with a company this large and being around for this long, you shouldn't really expect that much growth, but seeing this much is still good in my opinion. Again, I'm not a financial advisor. I do this for my own research, and I just put them to YouTube to hopefully give someone value and update the information that's out there to current 2021 standards. If we now look at shareholder returns and include the dividend returns, that's the stuff in blue that came up. So we'll just ignore the first part, we're not interested about that, so we'll just look at 1 year, 3 year and 5 year. So we can see from 1 year standpoint, with dividends not reinvested, it's 41.8. Well, just without dividends it would be 41.8, but with dividends it's 47. 3 years it's minus 12, with dividends it's minus 3, and 5 years it's 15.9% versus 34.2%. So you can see that dividends do have an impact, and in the industrial and the market you can see there as well. And on the right there's little graphics showing that 3M is less volatile than the industry, which, being a marine engineer, being away from home is quite necessary for me, as I may not have internet. These little bits here you can go read, they'll tell you more information about 3M. Just go to this website, Simply Wall Street, that's the free plan I'm on here. So it says 2 out of 5 companies viewed. and that's this month, so it keeps going up every month. So the valuation is the most important part. You always want to get a company at a fair value. You can buy penny stocks, but then they might be a shit company. If you can get a good company at a fair value, then that'll be very instrumental in your portfolio, in my opinion. And I believe that's what Warren Buffett's approach was. He used to do penny stocks and then he switched to this. So we can see it's $193.10, and the fair value is $200. So it's a little bit undervalued, but not by much. So I'd advise doing sort of drip feed approach at this point. If it dropped low into the green, then I would do like a more lump sum approach. So that would be the way I would be playing this, and that's the way I am playing it. So you can look at price to earnings if you want. I'm just gonna sort of skip over a lot of that now, because I realised in my older videos I went through everything, and I don't think I need to. As long as you have a good product, the fundamentals will follow. That's the thing that Elon Musk says. I know I keep quoting him in these videos, but it's true. So you can skip this part if you want. I'll leave timestamps, or you can just pause it or whatnot. So the earnings growth is obviously lower, but the growth isn't there in the company as it used to be. It's an old company. I'm more interested now looking at how it manages certain things and the income statements and balance sheets. It's good to see here that revenue, earnings, free cash flow and cash from operations have all been growing in line with each other. And that makes it easy to predict what the company's going to do. And then this is analyst future growth forecast. The company is higher than the industry. For the forecast annual earnings growth, the market is beating that, both of them. For the forecast annual revenue growth, the company is slightly below industry and again below market. But if you want a growth company, you wouldn't go with this anyway. This is a dividend investor strategy. The only growth we're really concerned about is dividend growth and stability in a company, and then a little bit of growth, but not anything like Tesla. We're not looking at that kind of growth. So again, you can have this if you want, just pause it. Earnings per share graph for you. Now it says here about future return on equity is forecasted to be higher in 3 years time, 37%, which is good, better than the industry at 40%. This is again promoting trust in the management of this company, which is something I'm looking for. Now we can look at past performance. 0.5% historic annual earnings growth, so that's not too high, but it's gone there anyway. So you can see it has high quality earnings, and the current net profit margins of 16.7% are higher than last year at 14.2%. Past earnings growth analysis, you can see on screen here. So 1 year, last 1 year earning growth, company did very well, the industry went to shit, and the market is not very good either. I think we know who's responsible for that. The earnings growth of 0.5 passed over the 5 years, and then the growth over the past year of 17.7% exceeds its 5-year average of 0.5%. Didn't think that was a very hard one to beat, not gonna lie. It says earnings growth over the past year of 17% exceed the industrial industry of minus 31.6. So again, not very hard to beat. So they're kind of just fleeting statements really at that point. But hey, 3M surviving a pandemic and actually thriving in one. It's a good sign. The return on equity is outstanding. This metric is skewed due to their high level of debt though. So don't just take it with a pinch of salt. That's why I keep saying with all the financials, sometimes it's hard to analyse a company. So just focus on some of the basic stuff. Don't get too caught up in like P ratios and all the different bloody ratios. as long as the company's got good management, manages debt well, has competitive advantage, and then it fits with your goals and timeline. That's the main one, really. If your goal is to be a dividend investor and you're in Tesla, then I don't see why. So that's pretty much it to investing. Just pick your goals and timeline, find companies suitable for you that you believe in. I'll give a conclusion at the end of everything that I think about 3M, but as you can see so far, I'm pretty bullish on 3M. Return on assets is good, better than the industry, and then the return on capital employed last year of 18.0%. And then down here we can see some of the assets and liabilities. So we can see short-term assets are bigger than short-term liabilities, and long-term assets are bigger than long-term liabilities. But we'll look at balance sheet anyway. So the debt to equity ratio is considered high, and the debt has increased from 94.2% to 145% over the past 5 years. So that's not very good. But again, if it's managing his debt, which below you can see the debt is well covered by operating cash flow of 43.2%, and that's the most important word in finance is cash flow. If you've read Rich Dad Poor Dad, and then the interest payments on his debt are well covered by his EBIT 14.1x coverage. We'll ignore the balance sheet for now, as we'll be looking at in a minute, and the dividend we've already looked at. There's that. We can look at the ownership, and then we'll see how it's who owns what. So down here the purple is the general public, so that would be like you or me. So we own 33%, and then the institutions own 66.9%. I can scroll down, there's the big companies, so BlackRock, Vanguard Group. So now we'll head over to the income statement and the balance sheet, and then we'll analyse that. So now we're on 3M's income statement. We can get data as far back as 2016. If you pay for this Seeking Alpha, then you can go back a bit further, but this should be sufficient for what we need. A thing to note is up here it says in millions of USDs, except per share owns, so all of these are in millions. Now the first thing as investors we need to consider is we want our companies to have consistent growth. And we'll see if that's the case in 3M. We also want to see if there's any irregularities, spikes and drops. Ideally you want it to be consistent. So from 2016 we can see there was a jump in 2017, another jump in 2018, and then it took a dip 2019, and then 2020 had a little tiny bit of a jump. All of the 2020 dates I don't take too much credit in at the minute because of the pandemic. However, I do use it as a way of seeing if a company's management is good, because the whole economic space was put in a very tight situation during the pandemic. So and still currently there's some things going on, so if it can still maintain, which 3M has, that gives me trust in that business. Gross profit is also another important aspect within a business, so we can see that's had a steady increase from 2016 to 2018, and then had a drop off 2019, a little increase 2020. Operating income is also another important part, and we can see this has increased from 2016 to 2018, with a little drop of 2019, and then 2020 as well. The operating income is what will be covering the debt, so we want this to be good. And as long as it can recover from 2020 to get back up, then we'll be happy. So it's just something to look out for. Net income, another one that's important. So you can see it's had decrease there, increase there, decrease, and then increase. So seeing it fluctuate like that isn't the best. Ideally I'd want it more consistent, but I'm still happy that the management is able to recover. We can see with the dividend per share has increased throughout, the payout ratio has remained near 50%, which is very good considering this company's dividend per share. It had an increase in 2019 with its payout ratio of 72.56%. However, it did manage to bring it back down to 62.93% in 2020, which again promotes trust in the business. Taking a look at the balance sheet now. Again, this is an annual and in millions of USD. So we'll go to the current assets and total current assets. Total current assets we'll just look at here, so we can see that it's increased, decreased, decreased, and increased. But again, you want to see the total assets, not the total current assets. In my opinion, I feel that's a better way to gauge the company. If we look at the total assets here, we can see there's been an increase, a little decrease, increase, and increase. Whereas the same period 2018 to 2019 saw a decrease, whereas this saw an increase. So that's why I feel using total assets is better. Just gives you a better idea of the overall picture. We can do the same with current liabilities and total liabilities as well. So you can see with the total current liabilities, they've increased, then a decrease, then a bigger increase, and then a nice decrease. So again, more fluctuating there. But we can see with total liabilities, it's more uniform increases there, then another increase, and then another increase, and then a little bit of a decrease. But we can still see that the total assets are more than the total liabilities, which is good to see. We have 47,000 million against 34,000. Okay, so now we're on the cash flow statement. Again, it shows you the net income, but we've already looked at that, so we'll just skip past that part. The first thing we want to really look at is the cash from operations. So we can see the cash from operations had a slight decrease, then an increase, and then a bigger increase, then another bigger increase. So the cash from operations is what's going to actually bring in the cash flow, which is the most important word in business. The free cash flow per share is another important part. So we can see that the free cash flow per share decreased there, and then increase, increase, and increase again. So that's great to see. In conclusion, the objectives of this video was to find out if the company pays a dividend, which it does, we found that out right at the start, what the company does, and we again found that out right at the start. We can see that it's very diverse into the sectors, being healthcare, consumer, government sectors as well. And we can see the vast array of products and brands that has to offer. The next thing I wanted to find out was, does it fit with my goals and timeline? Now this will differ for every person, but for me, in my case, yes. So I'll just tell you my case in case it's the same as yours. I'm going to be working away from home for extended periods of time, so I can't check my finances that often, so I need to make sure that they're reliable and stable. I got a key focus on dividends, and I mix my portfolio up between high dividend yields current and future high dividend yields. So 3M is good with its dividend of 3.04%, so that already fits in with that goal. The next thing I want to consider is the longevity of the company. As a dividend investor, we want to have the years of growth, and we want the years of stability. As we can see, 3M's been around since 1902, so it has a history of being stable and weathering all the economic crashes throughout that period till now. The other thing I want to consider is whether the dividends have been cut or not. And as we can see from that table, going back in history, all the way from its first dividend payment, 3M has never actually cut its dividend. There was a few years where it remained the same, but they never actually cut the dividend. So that again promotes trust in the management of that business and is another positive in my opinion. The next thing was looking at if a company was undervalued, and from the thing we found out that 3M was not overvalued and that it was in fact at a good price. It wasn't significantly discounted, being $194 compared to a fair value of $200. And again, I said back then, if you just drip feed that, and then if it did go down, you could bulk buy some if you wanted to play at that round. Currently for me, I'm trying to build up my position in 3M, as I have it as one of my targeted allocations as being one of the highest in my portfolio. But however, due to the price not being at a significant discount, I will not be bulk buying this company. I will just be drip feeding it and trying to wait for it to become a bit more on discount. The lower you get it on a price, the more margin of safety you have, and that's helpful for any economic crash. The past economic crash, my dividend portfolio has been able to stay in the positive and has weathered the storm, whereas my more speculative account has not, as I do not use the same amount of due diligence in that I only go for the companies there that sort of just play around with a bit. But then again, that's just me. Alright, so we'll move on to the next one now, which is it stable? And we found out that 3M is very stable compared to the industry and the market. It does not fluctuate very much, and due to it being an established company, it doesn't have the spike growth anymore. It doesn't have the investors who are not very intelligent, the people who go on hype stocks like the GameStop or whatnot. So 3M will remain stable because of that, which is again another reason why I love this company. And then the final thing I consider is what the financials look like. And we can see from 3M's financials that whilst they're not the greatest, they do not have any spikes or drops that I need to be concerned about. The payout has remained a consistent rate and has done well to drop it anytime the irregularities were there, where there was a little bit of a drop or a little bit of a jump. That's just the drops I'm concerned about most of the time, but if there's a little bit of drop in the income statement, like net income or gross profit, we can see that following years have just bumped that up anyway, so again, I'm not concerned about that. So closing statement, I would recommend 3M to any dividend investor who's looking for that stable dividend. If you're looking for a growth company, 3M is not a growth company. That's when you'd want to look at something like Tesla or Square, anything like that. Alright, so I hope you enjoyed the video. Like, comment, subscribe, leave any suggestions. This will be added to the playlist for my other stocks, and I'll just keep going through all these stocks until I finish my portfolio basically, and then if anyone else has a stock they want me to analyse to do with dividends, I will do so. So I hope you enjoyed the video. Go check out all the links in the description, especially the Trading 212 link, and I'll catch you in the next video. Peace out.
Tell me pretty lies, look me in the face. Tell me that you love me, even if it's fake.